So we are live in the session now, and we welcome you to today's session on the union budget.
Okay.
So if you can please take the session forward and help us to know the amendments better.
Yeah.
Thank you, sir.
Okay. Thank you very much, Priyanka. Good evening to everybody. Before starting, thank you very much to TRD, Tax Research Department, and headed by Kushal Sen Gupta, Directorate, and all the employees of TRD, and Chairman of the Indirect Taxation Committee, Ashish Thatesa, and Vibhuti, President of the Institute, Vibhuti Nayak sir, and Vice President TCS Srinivas Prasad sir, and all the council members. Our institute has put in a lot of effort regarding taxation. As you know, we are publishing bulletins every 15 days, taxation bulletin. It contains direct tax as well as indirect tax. All the amendments, notifications, circular, and analysis. Today we will discuss Union Budget 2025. As we know, there is no much amendment in indirect taxation, but there is a little bit amendments is there that we will discuss today. Even these amendments, we know very well, each and every council, nothing but a budget. 55th council, they have come with lot of amendments. But in budget, to strengthen the law, rules and regulation, the government will come with all this each and every rules and regulations and act, whatever required, they will amend it. If you see the here today, I will cover budget changes, recent changes, and GST advisories. And introduction, we know very well in union budget, they have focused on improving compliance and clarifying tax provisions and streamlining ITC distribution mechanism. All these things they have done it. This amendment address the issues related to ISD and RCM supplies and ITC restriction. And also the tax treatment of SEZ and FTWZ supplies. Notably, certain provisions have been amended retrospectively. Especially, you know very well, there is a Orissa High Court decision, subsequently Supreme Court decision relating to input tax credit on construction that had made a lot of revolution. People have started to take the input tax credit on all construction, those who are giving on rent. That has created a lot of confusion in the minds of the assessee. Because of that reason, government has come with an amendment retrospectively from 1/7/2017. Maybe that litigation will stop. Now people will not go to this type of litigation once again. Now one by one we will discuss appropriate time regarding safari retreat case also. I will explain in detail. Because see that amendment has given a full stop to this type of litigation. Even in my earlier webinar also, I have discussed this case laws and issues. I will discuss 3 to 4 provisions. Then I will come back to question and answer. Normally in chat box, people are putting a lot of questions. Each and every question, normally I used to clarify it. That is my normal way of handling the webinars. Always it should be interactive session. It is not a one-side session. The members can at any time they can interact with me. That is possible. Okay. I will go through each and every 10-15 minutes. I will go through the chat box, and if there is a query, I will react. Okay. If people are having a query, they can at any time they can put it in chat box. That is possible. Now, all good afternoon messages that and all. Okay, very good. Thank you very much once again. Good evening to everybody. And now, one by one, we will discuss the provision. Input service distributor. What is the amendment? And what exactly ISD? That we will discuss now. We know very well. The service, say like so many services, people can raise an invoice to the head office, but head office or a branch office for that matter, absolutely no problem. People can give a service throughout India or a world. Okay, then but they will raise the invoice to the head office or branch. But service is relating to company as a whole. Then if the company is having a 25 branch or 20 branches throughout India, depending upon the situation, proportionately they can distribute that ISD. They have come with an amendment. That what type of amendment I will discuss little bit later, but we need to understand what is ISD first. ISD is a service. Okay, you are giving a service to the company as a whole, but you are raising an invoice to particular branch or a head office. In turn, they will take the whole input and they will distribute to the all branches. That is called ISD. Input service distributor means an office of the supplier of the goods or services, both which receive the tax invoice toward the receipt of input service, including invoice service liable tax under subsection 393 and 94. We know very well are listed RCM and URD, unregistered dealer services, for and behalf of distinct person referred in section 25 and liable to distribute the input tax credit in respect of such invoice in the manner provided in section 20. Then there is an amendment. IST to distribute the ITC in respect of tax invoice received toward the supply of service, including intrastate RCM. Interstate RCM was not included. Say earlier, interstate RCM was not included under IST. Say for example, if I receive any services under RCM, okay, then automatically I am not eligible to distribute it if it is an interstate. Because of that, they have made an amendment to the definition to include service liable to tax under subsection 3 of subsection 4 of section 5 of IGST Act. Okay, under section 5.3 and 5.4 under IGST Act. Okay, there is a listed section 5.3 and there is a URD under section 5.4. Whatever that RCM related to ISD, they can distribute. That is what they have come with an amendment. Input service distributor shall distribute the credit of central tax or integrated charge on invoice received by him, including the credit of central or integrated tax in respect of service subject to levy of 3 and 4 paid to distinct person registered in the same state and said input service due in such a manner which subject to such restriction and condition may be prescribed. Okay, manner of distribution, it's all depending upon the turnover or some mechanism. Okay, that in rules they have explained. Here it is a comparative table distribution of ITC by inputs at ISD for RCM supplies. Provision. Existing law, IST could be distribute ITC only for supply other than RCM before amendment. Then IST can distribute ITC for interstate supply subject to RCM reference 5.3 and 5.4 of the IGST Act. Okay, This is possible. Then limited IST mechanism for RCM ITC distribution clarified. IST mechanism for business distributing ICT related to RCM. Okay, effective date. Earlier it was not there. It will come into force from 1st April 2025. I think RCM is okay. Now relating to RCM, if the people are having any question, we will discuss. Okay. Sir, Babu Velu Murugan, membership number 32596. Can please highlight on the procedure for withdrawing appeal filed? Is it by a manual or through online? Sir, see, I will tell you. Before introduction of the e-filing of appeal, whatever appeal filed manually, you have to withdraw. Okay. And if it is e-file, if the appeal is e-filed in website only, you have to withdraw the appeal. Okay. Then only see whatever appeal you have filed before starting the e-filing, that is not reflecting in the system. It is possible to withdraw only manually. Okay. For to get the benefit of whatever Karasamadhan scheme, waiver scheme, you have to withdraw the appeal. Probably you are asking question for that reason only. If you are having any other question, please tell me. I will clarify. Now, supply of voucher. As of now, only one question that I have replied. See, as of now, only one question. All good afternoon, good evening. That is okay. Otherwise, only one question, withdrawal of appeal. Okay. For manual appeal application, you have to go and meet that joint commissioner. You have to submit a manual application so that you can withdraw the appeal. If it is filed electronically, in online only, you have to upload the application to withdraw the appeal. Normally, now, if you want to go for waiver, people are withdrawing the appeal. Okay. Now I will go to the supply of for vouchers. Now, before discussing this amendment, we will discuss a little bit about the rules relating to the vouchers. We know very well, all these companies, they are issuing some gift vouchers. Finally, by using that voucher, maybe you will receive the service or goods depending upon the situation. What will happen? What is the taxation of voucher under GST law? That we will understand. Then we will go to the amendment so that we will understand properly. The vouchers, if you issue the voucher, if it is relating to particular product or services, say for example, I am issuing the voucher saying that you have to purchase only gold, you have to purchase certain commodity, you have to get certain services. If the voucher is identified along with the services or goods, then that voucher is immediately taxable and rate of tax is relating to that goods or services. Okay. But if you are issued the voucher, at the time of issuing the voucher, you don't know people will buy the product or services or they are buying which product, you don't know, because you have issued the voucher to certain stall people will go depending upon their component to the extent of voucher, they will buy the commodity. Then automatically it is the commodity is not identified along with the vouchers. Then taxability, it's all depending upon usage of voucher. Okay, that is the provision under GST law. Here, time of supply provision provided for the payment of tax. However, subsequently court as well as circular clarified that vouchers are neither a supply goods or nor a supply of services. Say due to development, Kalyan Jurors, Madras High Court and circular number 243. After issuing this circular and Madras High Court decision, at the time of issuing a voucher, it is neither a supply or a service, hence it is not taxable at the time of issuing. Only at the time of encashing the voucher, it is taxable. That is why they have come with an amendment made to the time of supply provision to remove the time of supply for vouchers. Supply of vouchers are not liable for GST. Therefore, provision of time of supply is removed. Try to understand. Before Madras High Court decision relating to Kalyan Jewelers and circular number 243, voucher is taxable as and when it is issued if it is relating to or if the products is identified along with the vouchers. But after the amendment, at the time of issuing, no need to discharge the tax liability. At the time of purchase, then only it is taxable. Now comparative table. The comparison existing law amended from budget 2025 GST deletion of time of supply for vouchers. Section 12.4 and 13.4 define time of supply for voucher. These sections are deleted. Specific provision existed for voucher based supply. Vouchers are now considered neither a goods or services and effective date to be notified. Okay, that section is removed now. Voucher is not taxable. Anyhow, at the time of deemed, okay, encashing that voucher, automatically on that product or goods, people will charge the tax liability. That is why this provision is not applicable now. If voucher is purchase of a gold and GST charged with a voucher, will let the actual purchase, the invoice made with the invoice, the GST is rejected. Babu Velu Murugan sir, 32596 membership number. Sir, before this amendment and before the Madras High Court decision and circular, whenever you issue the voucher for purchase of gold, at that time only it is taxable at the rate of gold. Okay, say for example, if the GST is applicable to gold 3%, they are supposed to discharge the tax liability. Now, because of removal of that section, at the time of selling the gold, they will charge the GST. Now, taxability of voucher does not arise. Okay. I got cleared with the explanation from Kalyan Jewelers case. Thank you, sir. Okay, very good, sir. Babu Velamurgan, sir, it is clear now. Really good. Say the thing is, now, if the companies are issued the voucher, no need to bother. It is not taxable at the time of issuing the voucher. Only at the time of encashing the voucher. Encashing means whenever you are buying the product, at that time, those who are selling the product, they will levy the tax. That is why now taxability of voucher doesn't arise. Okay. CME Avinash Malik. Okay, very good. Now, once again, I will go back. I think regarding voucher, it is clear. Section 17.5 retrospective amendment. Before discussing with this amendment, we need to discuss Sapari retreat case. Okay, then we will discuss this amendment, because in the Sapari retreat, the High Court has decided to give a input tax on all construction material, because after construction of the building, he will rent it out, and whatever rent he is getting on that, he will discharge the tax liability by using the input tax. That is why there was a lot of litigation. That is why always I used to tell, if they are ready to allow a input tax on construction, if you want to rent it out, why not factory building? Why not office building? All these things, automatically question will come to mind and people will start litigation. That is why somehow they have put a full stop here. Now in Safari Retreat, what happened? They have constructed the building. They have taken all the input. In turn, they have told what ultimately on rent we are discharging the tax liability. Hence, I am liable to get all this input. High Court said definitely they are discharging the tax on output. Hence, they are eligible to take the input. There is all interpretation, how they have presented all these things. Now we will discuss. The goods or services both received by a taxable person for construction of an immovable property other than plant or machinery on his own account, including when such goods or services or both are used in the course or furtherance of business. Amendment made to plant or machinery or plant and machinery with retrospective effect. See, the thing is, whether plant and machinery is one and the same, or plant or machinery. What is plant and what is machinery? Here, if you use a plant and machinery, it is one and the same. But earlier, before amendment, they have used plant or a machinery. Whatever constructed building they have presented, say it is a plant, hence I am eligible to take the input tax credit. That is what they have presented. Somehow they are able to convince the High Court, even Supreme Court. They said it is eligible, but finally government has come with an amendment saying that it is not a plant or machinery, it is a plant and machinery. Okay, to clarify, said amendment is made notwithstanding any to the contrary contained in the judgment, decree or order or any court or any other authority. Amendment nullify the effect of Supreme Court decision in the case of Safari Retreats Private Limited. Now, all the construction activity, if it is not for sale, then definitely input is not allowed. If it is an immovable, say for example, if you construct a building and during the course of construction, if you sell the flat or a building, then definitely it is not an immovable, it is a worse contract. You are eligible to take the input tax credit. But if it is an immovable, then there is no question of input tax credit. Because of this amendment, okay, Safari Retreat Supreme Court decision is null and void. Hence, there is no question of input tax credit. Party engaged in the, just I will read out the Safari Retreat case. Party engaged in the construction of shopping mall and renting it out. Dispute about the constitutional validity of eligibility of ITC related to entry clause number C and 17 par. SC held that entries are constitutionally valid. The plant or machinery used in section 17(5)(d) cannot be given same meaning expression of plant and machinery defined by the explanation to section 17. Matter remanded to decide whether the building or plant or not. SC also made a comment, the construction cannot be said to be a taxable person own account if it is intended to be sold or given for lease or license. That is what they have observed. Then finally, because of this amendment, the Supreme Court decision is a null and void. It is a comparison. Existing law, section 17, used plant or machinery, change the category plant and machinery, allowed the misinterpretation of Supreme Court rule in Safari Retreats, impacted ITC, removes the ambiguity and applied the retrospectively from 1st July 2017. Effective date, okay, retrospective 1st June 2017. Because of this decision, almost all if any case is pending before the High Court or Supreme Court or in any appellate level, say for example, tribunal is not yet set up. If it is pending before any joint commissioner or commissioner appeal, then automatically they have to withdraw the case and they have to discharge the liability. Now, I will go through the question. Okay, Babu. Okay, yes, Babu. Velu Murugan, membership number 32, 596. Sir, if the civil work is carried for the erection of the machinery like a concrete bed, also not eligible for ITC. Sir, definitely, if you create a concrete bed for a machinery, it is a foundation for machinery. Definitely, you are eligible to take the input tax credit. So many advance rulings are there. Before introduction of even GST law, under central excise also Senvat was allowed. Hence, you are eligible to take the input tax credit if it is a civil work for machinery. All the beds, whatever you have created for machinery erection, definitely it is allowed. If you are having any doubt, once again, we will discuss. Without civil bed work, the machinery cannot be put in operational. So definitely, sir, that is what I have told. Whatever input relating to civil bed to erect the machinery, that is eligible. Absolutely no problem. If you see the earlier law, under central excise law also it was allowed. Even GST law also it is allowed. There is a advance ruling. Okay. There is an advance ruling. If you go and search in Google, you will get that advance ruling. Otherwise, if you talk to me personally, I will give you that advance ruling. Okay. Thank you very much, Babu Velumurugan. And the gift voucher are considered tender cash by understanding it is correct. Definitely, sir. Definitely, no doubt at all. Okay. Babu, well, gift vouchers are considered as a tender cash by understanding it is correct, sir. It is at par with the cash. It is a mode of payment. It is not a goods. Okay. Babu Velumurugan, sir, please reply whether you are able to get the answer relating to civil work, relating to machinery. Please reply yes. But establishing the same is become a bigger task at the time of assessment. Absolutely no problem, sir. You can refer central excise cases and even advance ruling. Don't leave it. Okay. Somewhere in the Supreme Court, maybe it will settle. But as of now, according to my opinion, according to advance ruling, as well as central excise cases, it is allowed. Absolutely no problem. Now I will go back to next provision. Actually, I am expected lot of question relating to safari retreat. Somehow our members are not reacting. Say, for example, the people assessing authority linking with building maintenance. Try to understand. Immovable asset is different. Building maintenance is different. According to GST Act, those who have capitalized in the books of account that much only immovable, that input on that is not allowed. All other building maintenance, input on building maintenance is allowed. You are eligible to claim it. Some of the assessing authority, they are not allowing that. No need to bother. If you are having that type of situation, better to file the appeal. Okay. Building maintenance, assessing authority is considering at par with immovable. That is not correct. That is why what I am telling, if you are having a building maintenance expenses, try to claim that input tax on building maintenance. For that also, lot of advance rulings are there. Okay, thank you very much. I will go to next provision. Amendment under section 34. Proviso of section 34 substituted proviso provided that reduction shall be not allowed if the incident of tax is passed on any other person. Substituted proviso requires that the recipient should reverse the ITC if availed. If the recipient is an unregistered person, then incidents of tax passed on any other person. It is made mandatory to ensure that the recipient reverse the ITC while claiming the benefit of credit note in GST return. This is also implemented as per IMS. It is another big source of litigation. Now we will discuss. There is a sale. What you will do? There is a sale of 100 rupees. You will raise the invoice and you will discharge the tax liability. And your recipient or your customer, he will have a negotiation with you due to some quality problem or otherwise some negotiation. You are ready to give a discount of ₹5 to the customer, saying that okay, I will reduce instead of 100 rupees, ₹5 per unit. Then what you will do? You have already discharged the tax liability on 100 rupees. You are eligible to reduce your tax liability on 5. Then what will happen? You have already discharged the tax liability on 100. You are raising a credit note. You will reduce the tax liability even in your GSTR 3B or in GSTR 1. Whether your recipient has reversed the input tax credit or not, you don't know. That is why automatically now earlier there was a provision. Section 34 substituted proviso provide that the reduction shall not be allowed if incidence of tax is passed on any other person. Okay, say for example, if he is not reverse the input tax credit, automatically double benefit. You are reducing your liability. He is not reduced the input tax credit. Then there is a double benefit. Because of that reason, government has amended the act saying that if your recipient, if he reduce the input tax credit, then only you are eligible to reduce your tax liability. It is very, see now IMS facility is there, that we will discuss little bit later. What is a invoice management system, how it will work, whether it is mandatory or not, all these things we will discuss little bit later. But the question is, if you are having a huge transaction, matching one-to-one all this credit note, it is very difficult. It involves lot of clerical work. Once again, litigation will start. Okay, but in the long run, in matching process, all these things, it is possible. Okay, once IMS, if it is mandatory, then automatically in 2B, all your input automatically it will come down and output liability also it will happen. But up to that, there will be interaction between your customer. You have to tell to reduce the input tax credit and you have to tell to them to upload it, and all this process it involves lot of confusion and litigation. Okay, that is why say if you raise the invoice by way of credit note, you are eligible to reduce your tax liability, no doubt at all. But the question is, if you want to reduce your liability, those who have taken input tax credit, they also reduce their input tax credit. Then only it is possible. Nowadays, all this commercial credit note, all these issues, once again, how it will impact, God only knows. Okay, up to that, this litigation will continue. Especially based on my observation, lot of litigation is there in credit note only. Now, maybe members will ask lot of questions. We will discuss now. Sir, if the retrospective given 172 is parallelly keeping aside the Supreme Court decision live, it seems to that this will be a wrong procedure. How? Sir, see the Swaminathan, sir, definitely it is a wrong procedure. Several times government told we will not come with a retrospective decisions, but Again and again, they have come with a retrospective amendment. That is not good development actually, but we can't help it because it involves lot of impact. Because of that reason, they have come with a retrospective effect relating to this Supreme Court decision. Sapari retreat. Otherwise, in normal course, government said clearly, normally we will not come with a retrospective amendment. Okay. What you are telling is right, Swaminathan sir. 21009. If it is a retrospective is given with effect from 170, parallelly keeping aside the Supreme Court decision, live it seems that this will be wrong procedure. How? Okay, definitely no doubt at all. Is ITC available in construction of office building? No. Office building, construction of office building, ITC is not available. Who is that? CMA AK Bothra sir. Membership number 19850. ITC on office construction building is not allowed. Please kindly request to share your phone under email address to seek your advice separately. Thank you very much. Okay, definitely. I will share my email ID and this one. Okay. Sir, circular number 212 certificate can be provided by CMA 2. I am right? Yes, sir. Definitely possible. Okay. According to me, distributor working on a behalf of issue of and earning commission have to pay GST. Please clarify distributor of voucher are subjected to GST commission or not. Definitely on commission he has to discharge the tax liability. No doubt at all. Voucher, if you distribute the voucher, if you are getting any commission that is taxable and you are supposed to discharge the GST. According to me, distributor working on the behalf of the issue and earning commission have to pay the GST. Definitely, sir. No doubt at all. Okay. Then according to me, behalf of the issuer earning commission. Okay. If the voucher expire unused, no supply of goods or services occurs. How to take the credit back of a voucher already distributed? No, sir. Only commission you will discharge the tax liability. On voucher, nobody will discharge the tax liability. But commission, whatever you have received, if you want to give it back, then automatically by way of credit note and debit note, you have to adjust it. That is possible. Amendment under section 34. We have discussed in detail regarding credit note. Now, amendment under section 38 and 39. 38 that provided that the claim of ITC will be based on auto-generated GSTR 3B. Replace the word auto-generated statement with the statement amended provisions enable the implementation of IMS. Say for example, now invoice management system has come into place. It is not mandatory, but even then it has come into place. Once it make mandatory, automatically how it will work GSTR 3B that we will understand past. Then we will go to the invoice management system and how it will impact. All these things we will discuss. We know very well people are uploading GSTR 1 and it will come and sits in GSTR 2B. Whatever available in GSTR 2B, you are eligible to take the input tax credit. You are eligible to take the input tax credit subject to depending upon the eligibility. Say for example, invoices are comes in sits in GST or 2B, but goods are not received. Definitely you are eligible to, not eligible to take the input tax credit. First point. Second point, even though credits are available in GST or 2B, if it is not relating to you, definitely you are not eligible to take the input tax credit. Like that, so many credits not relating to you, if it comes and sits in GST or 2B, you are not eligible to take the input tax credit. Okay. Now the question is, whether see the thing is, now after IMS, whatever you are available in GST or 2B through IMS, you are able to subtract. Say for example, if the credit is not relating to you, you can reject it. If the credit is relating to next month, you can push to next month. Like that, IMS will work. Based on that IMS, you are able to whatever adjust your 2P. That is possible. Because of that, they have come with an amendment saying that earlier, before the amendment, section 38 and 39 provided that the claim of ITC will be based on auto-generated statement in GSTR portal. Now, replace the word auto-generated statement with a statement auto-generated subsequently based on your manual interaction. You can change your credit. That is why they have amended. Amended provision enables the implementation of IMS. Okay, because they want to implement a IMS. Because of that, instead of auto-generated statement, they have amended as a statement. Okay, auto-generated statement, you can change it manually. You can change it. That is possible through IMS. Okay, with a rejection. Okay, with a reject of credit or whatever. All these things that is possible. Because of that reason, they have come with a section 38 and 39. Now we will go to chat box. There is a lot of question. Just give me 1 minute. I will have copy and I will proceed. Okay. Sorry for the inconvenience. 1 minute. Now there is a question. Is ITC available on construction of warehouse for a rent received from customer warehouse rent? Sir, after amendment, okay, now definitely not possible because they clearly said it is not a plant or machinery, it is a plant and machinery. Okay, whatever constructed building is not a plant, hence you are not eligible to take the input tax credit. After amendment, Sapari retreat case is null and void, hence you are not eligible to take the input on construction of warehouse. That is not possible. Sir, please take few minutes break. Okay, I have taken. Very good. Sir, I have a doubt. If the customer doesn't use a credit and doesn't reverse the credit note, How can supplier reduce the liability prescribed with a credit note? And sir, that is B2B cases. In case of B2C cases, definitely it is not required. You are eligible to reduce the liability. What is the effect of change in wordings from auto-populated statement? Effect of change in wording from auto-populated statement. Sir, that is what I have told. See, auto-generated statement means it is said to be. Whatever automatically it will come to the to be, that you are eligible to take the credit. After introduction of the IMS, okay, invoice management system, if the credit is not relating to you, then automatically you will reduce it. If the credit is not eligible to take the credit, you will reduce it. Then if the credit is relating to somebody else, by mistake some supplier has uploaded, you will change it. After intervention, your manual intervention, automatically to be will change. Then auto generated to be and what actually with the impact of IMS is totally different. That is why they have amended the act. What is the impact of change in the wordings from auto-populated statement? That is what my explanation. To be is auto-generated, but after introduction of the IMS, to be will change depending upon your intervention. Okay, that is not auto-generated. It is a statement. That is why instead of auto-generated, they have used a statement. IMF optional now, not mandatory. In that case, whether the amendment in section 38 is, sir, that is what I am telling. Section 38 and 39 impact we will see later. It is not mandatory now, but in future they will make it mandatory. Following GST Act, which is officially notified to follow. What your views are? Say, see here to be notified. Section 38 and 39. As of now, it is not mandatory. After the notification, it is not it is mandatory. As of now, whatever to be only state mandatory. After once it is notified, then automatically that is mandatory. Okay. Here comparative statement section 38 1 and 2 used for auto generated for ITC statement. Auto generated removed including added for flexibility. ITC statement for was rigid, allows flexibility in GST written statement formats. Flexibility in the sense depending upon your eligibility, you can change it. Okay, it is not yet notified. Maybe I have clarified. Sir, IMS optional now. Okay, once it is mandatory, IMS mandatory, probably they will make it mandatory and they will issue the notification. Bhaskar, how to treat blocked credit in IMS? Sir, IMS blocked credit you have to reverse in a separate column. In IMS, it is not possible. Also, IMS have an option not to select the particular ITC on the invoice rather than GST or 3B. Have all the details for the returns filed by the supplier where full ITC is allowed. Again, it will affect the cash flow position of the business segment. Request you, sir, see the one is IMS is a system and act is different. All is restricted credit and blocked credit, all this law that you have to question in court of law only. Whether it is your cash flow will come down, all these things are not botheration of IMS. IMS is a mechanism to support the GST return. To what extent you are eligible to take the input tax credit, to that extent it will comes and sits in that statement. Sir, in case of B2B also some customers are not using the credit due to ineligibility or use the item personal use. That is what, sir, say for example, whether they are in case of NNV for the Sarathi, sir, if they are using or not, that is not the criteria. Okay, see, even ineligible credit, you have to take the credit and reverse it. That is why even if it is not eligible credit, what they have to do, they have to reverse it. Okay, then only you are eligible to take the eligible to reduce our liability. Sir, NNV Pardesarathi sir, try to understand, even though it is an ineligible credit, to that extent, you have to give an impact. Then only those who have supplied the goods, they can reduce their liability. That otherwise it is not possible. Whether you will, for you it is eligible credit or not, that is not the criteria. Okay. Pardasarathi sir, if you are having any doubt, you can interact with me, not a problem. However, lot of manual work in this new system, it is there, we can't help it. This IMS system will remove the maximum of reversal of IPT, both not related to us and voluntary reversal by us, by understanding. Correct, sir. Babu Vela Murugan sir, your understanding is correct. What is the time limit to avail the ITC, sir? Say time limit to avail the input tax credit is up to November return. Okay, November 30th is the last date. Next year, November 30th is the last date to take the input tax credit. If IMS is coming mandatory as per the notification, then how to reclaim the credit under GSTR 3B? Automatically, sir, once IMS is mandatory, reclaim and claim will automatically, it will change. That impact will change. Ineligible credit has to be availed and reversed. Correct, 100%. CMA, Usha sir, always ineligible credit. First you have to take it, then subsequently we have to reverse it. NNV Pardasarathi sir, he got it. Okay sir, that is what you have replied. I think each and every query I have replied it. If somebody is having any query, they can interact with me. I will go to next provision. Invoice management system. Okay, I will not take much time because it is not mandatory now, but better to know the rules and regulation relating to IMS. If possible, better to start this activity so that whenever it is mandatory, automatically we are compatible to this system. Deemed accepted. At the time of GST 3B generation, a record will be considered as a deemed accepted. If no action is taken, that record in IMS. Following larger will not go to IMS and will be directly populated in GSTR 3B. Inward RCM supply where the supplier has reported in table 4B of IFF, GSTR 1 and GSTR 1A. Supply where the ITC is not eligible to use Section 64 of the CGST Act or on accounts of point of sales. 16.4, you know very well. Okay, time barred credit, automatically it will not come to GSTR to B. Okay, automatically it will not come. Except accepted records will become a part of ITC available. Section of respective GSTR 2B. GST on accepted records will be auto-populated in GSTR 3B as a eligible ITC. Rejected records will become a part of ITC rejected. Section of respective GSTR 2B ITC of rejected records will not auto-populated in GSTR 3B. Pending records will not become a part of GSTR 2B and GSTR 3B. Such a records will remain on IMS dashboard till the time same is accepted and rejected. Pending action shall not be allowed following scenario. Original credit note, upward amendment, downward amendment. Okay. See, you are having accept, reject and pending. Pending, whenever you want, you can use it within the time limit. Okay, record will flow to IMS dashboard at the time of saving of the record. And all the accepted, deemed accepted, rejected records moved out of IMS dashboard after filing a respective GSTR 3B. Pending records remain in IMS dashboard and these records can be accepted or rejected for future months. Now, already I have explained once again why pending is required. Say for example, this month already it has come to your books of accounts. Say for example, it is in 2B, but it is not accounted in books of accounts because you have not received that goods. Then you can keep it pending. Next month, whenever required or whenever you have received the goods, you can utilize it. So many cases, okay, what will happen? Maybe they will upload it. You are not eligible to take credit immediately because of so and so condition. Because of that reason, you have to keep it in pending depending upon the situation, whenever required or whenever you are eligible to take the input tax credit, that you can take it. It is a mandatory to original record and file a respective 3B and taking action on amended record. GSTR 1A and 1 when the original and amendment belongs to different GSTR to be written period. If both the records belong to same period to be, only amended record will be considered as a ITC calculation. GSTR to be any change made in a record in before filing the 1A and IFF by the supplier will reset the records and status of recipient IMS dashboard. GSTR will be sequentially now, i.e. system will generate the 2B of a return for a period only if GSTR 3B of previous period is filed. Say for example, if you have not filed any GSTR 3B for the previous months, automatically next month 2B you will not get it. That much of credit you will not get it. That is why filing 3B for each and every month is mandatory so that it will support your input for next month. That is the idea actually. And the liability of a supplier will be increased GSTR 3B for the subsequent tax period for the invoices records which have been rejected by the recipient in the IMS for the following transaction. Original credit note rejected by the recipient, upward amendment credit note rejected by the recipient irrespective of the action taken by the recipient or original credit note. Downward amendment credit note rejected by the original credit note was rejected by him. Downward amendment invoice or debit note rejected by the recipient where the original invoice or debit note accepted him and respective GSTR has also been filed. RCM invoices are not part of IMS but will continue to be a part of GSTR 2B as a being reflected today. Okay. Now, once again, I will interact with people, then I will come back. Swaminathan sir, also IMS have not to select the particular ITC on the invoice rather than GSTR 2B, have all the details for the returns filed by the supplier which full ITC is allowed. Again, it will affect the cash flow position of the business segment. Request your input, please. Sir, Swaminathan sir, here we are discussing about the law. No doubt, if you are not eligible to take the input tax credit, you will keep it in pending. To that extent, cash flow will impact, no doubt at all. Because legally you are not eligible to take the input tax credit. Next month you will take the credit. IMS have not to select the particular ITC. Not to select means you can keep it in pending. To the extent of whatever keep it in pending, that much credit you will not get it for that particular month. You will get only for next month. To that extent, cash flow will affect. Anyhow, legally you are not entitled to take that credit. You have to face that problem, no doubt at all. Even now, without IMS also, maybe government is don't know whether you have received the goods or not. You are eligible to take the credit or not. Maybe you will take the credit. Otherwise, legally you are not entitled to take that type of credit. You have to take it in next month only. Okay. This is my answer to Swaminathan sir 21009. Now I will go back to PPT. Amendment provisions related to pre-deposit. We know very well there is a pre-deposit requirement. What will happen if you get an order on interest and penalty? No need to make any deposit, pre-deposit, only principal amount 10% or 20% depending upon the High Court or Supreme, depending upon the commissioner, joint commissioner or commissioner appeal or tribunal, you have to discharge it. Now they have come with an amendment. If the order contains only penalty, then you are supposed to deposit, pre-deposit. Section 107, which provides for filing an appeal before appellate authority, required making a mandatory 25% of the penalty against the order of the 129(3). Other cases, 10% of tax. No pre-deposit demand is only for penalty. And now, provided that in case of any order demanding penalty without any demand of any tax, no appeal shall be filed against such order unless a sum equal to 10% of said penalty has to be paid by the appellant. For appeal before tribunal, additional 10% you are supposed to deposit. Okay, this is the amendment. Only section 129, 25% of the penalty, otherwise all other penalty, no. Now for appeal before appellate authority and appellate tribunal, it has been provided that pre-deposit would be considered 10 to 20% penalty where the demand person only penalty, no tax amount. Okay, if there is no tax amount on penalty, you are supposed to discharge 10% and 20% depending upon the situation. Amendment to pre-deposit penalty 122A, any who retains the benefit of transaction covered and whose instance such a transaction is conducted shall be liable for penalty of an amount equal to the tax evaded input tax availed. Okay, this is the case law. Now, comparison of existing law and budget to the update. Mandatory pre-deposit for penalty only for appeals. Okay, no specific mandatory pre-deposit for a penalty, only appeals. Section 1076 mandate 10% pre-deposit, 128 mandate 20% for tribunal appeal. As of now, for only penalty, there is no pre-deposit, but here 10% and 20% depending upon the situation, either for joint commissioner or appeal or a tribunal appeal, they have made it. In fact, no deterrent for previous appeal, strengthen the compliance and effective date not applicable earlier, and now it is to be notified whenever it will notify. Even for penalty order, you are supposed to deposit 10% and 20% depending upon the situation. Okay, then as of now, is there any question? Okay, as of now, no question. I will go to next. Respective amendment to Schedule 3, specific entry was not there in Schedule 3, leaving it open for interpretation. But earlier also, it was not a supply. Clause AA of para 8, it has been provided that supply to goods warehouse in a SEZ or in FTWZ to any person before clearance for export or to the domestic tariff area shall be treated neither a supply nor a goods. Okay. Earlier also it was not supply, but there was some officer they have interpreted wrongly and they have levied the tax. That is why they have clarified it is not a supply. Brings clarity to the supply made to SEZ, made from SEZ and FTWZ. Track and trace mechanism of GST. Normally, especially iron and steel and some of the special commodity, scrap, iron and steel, scrap and all. This is a revenue prone transaction. Say, for example, especially for these commodities, there is a lot of tax evasion. Because of that reason, you have to generate a special code for this material whenever you are transferring or whenever you are selling from one place to another place or whenever you are selling. By seeing that number, department people will alert, or if they want to do some inspection during the course of transportation, they can do it. That is why they have come with a track and trace mechanism for specific commodities. What is that? What exactly it is? For enabling provision in CGST Act 2000 through Section 140 has been inserted so as to empower the government to enforce the track and trace mechanism for specified evasion-prone commodities. The system shall be based on unique identification number shall be said goods packages thereof. Penalty provision non-compliance will be 1 lakh or 10%, whichever is higher. Say for example, they will come with a list of commodity. If you sell that commodity, you have to generate a unique identification mark. Otherwise, if you sell without that, if you sell it, you have to pay 1 lakh or 10% of the tax amount, whichever is higher. Okay, that you need to generate. It is a amendment. Composition existing law, comparison with the existing law and amendment 2025 track and trace manner. No legal framework for track and trace. There is a mechanism inserted for penalties and enabling mechanism. Lacked enforcement, strengthen the supply chain monitoring and to be notified. After notification, automatically you have to generate a special code for this. It is only a warehouse goods. Provision is not clear, sir. Sir, that is what? Whenever you are warehouse goods, where only for SE word before export and before selling, it is not a supply. It means whenever you, sir, okay, CMA, CU, Usha madam, maybe Usha madam, whenever you are importing the goods, okay, to SEZ, if you are storing that goods in SEZ before export or before selling to export market, it is not a supply. That is what provision. Earlier also it was not a supply. They have clarified by way of amendment. That's all. Who has power to reduce the increase in GST rates? Ravi P. Maybe Ravi Pacha from Bangalore. Sir, Ravi Pacha from Bangalore. Who has power to reduce the increase of GST rates? Sir, each and every GST council, they are having a power to reduce the GST rate. Ravi P, maybe he is from Bangalore, Ravi Pacha from Bangalore. My general observation, instead of paying my vendor to GST and following with him, upload invoice, payment of tax, increase. Instead, why not vendor file a sale GST like RCM? I will discharge my liability under RCM and I am sure ITC for the taxes paid. It is general feel. Oh. Babu Vela Murugan sir, instead of me paying to vendor the GST and following with him for the upload of invoice. No, sir. That type of RCM provision, Babu Vela Murugan sir, whatever you have explained, that type of provision is not there in Act. That is why it is not possible to do it. Okay, it is not possible to do it. Have you one question on applicability of GST on commercial rent receipt of 18 lakh for one property and residential property 12 lakhs? Is it mandatory register? Sir, definitely. If you are having a residential rent 12 lakh and 18 lakh commercial, definitely you need to register, sir. Okay. Definitely you need to register. Mandatory rent, GST Act, total rent received more than 20 lakh. Definitely you need to register. CK Velumurugan sir, based on your question, you need to register. It is applicable. Taxability of restaurant services. This is another good move from department. Now try to understand under present scenario, how restaurant is taxed. They are having an option. For, say, for example, if you are having a lodging as well as a restaurant service. For restaurant service, they can discharge tax liability without ICC. 5%. The tax rate is 5%. But lodging rate tariff, if it is exceeds 7,500, that automatically, including restaurant service, they are supposed to discharge the higher rate. The here problem here is, see, you are having a multiple location. You are having a 10 location. Okay. One location you are having a restaurant as well as lodging. There you are exceeding 7,500. In all other location, your lodging tariff is below 7,500. Here there is a lot of litigation. Department people, some of the asking authority, they are asking a higher rate of 18%, but that is not correct. Especially for Sandesh Hotel, Mysore, Karnataka, they have come with a advance ruling saying that if you are having a restaurant as well as lodging, wherever you are having a lodging, if you are charging more than 7,500, only for that restaurant, tax rate is 18%. Otherwise, all other restaurant rate of tax is 5% without input tax. But people are having a lot of confusion. Even department officials, say for example, central authority, they will levy the tax wherever you are exceeded in particular month. In that case only they are charging higher rate. Some of the state authorities, they are charging for whole year. Some of the state authorities, without understanding the law since beginning, say for example, somewhere in March you have crossed, means since beginning they have levied the tax. All these things are happening now. Because of that reason, they have amended the law saying that you have to declare before 31st March whether you want to go for 18% or 5%. Say for example, now I will explain. Rate of tax for a restaurant service in a hotel depend on the declared tariff of the rooms in the said hotel. If the rooms with a declared tariff equal to in excess of 7,500, then rate of tax was 55% with ITC. Amended made to link the rate of tax for a restaurant with the actual sales value of the rooms instead of declared tariff. Further option is also given for restaurants in a hotel not falling in the above case to pay GST 18% with ITC. Option enables the restaurant to choose between either 5% or without ITC or 18% with ITC. They are having an option. Revised option is applicable with effect from 1/4/2025. Opting for revised rate of ITC, taxpayer has to file a declaration between 1st January to 31st March. And in case new applicant, declaration shall be filed within 15 days from the date of acknowledging the acknowledgement. Declaration for given in the notification applicable only restaurant in a hotel. No change for standalone restaurant taxable at 5% without ITC. That is possible. Okay. Restaurant, because of lot of litigation and representation from the hotel group, they have come with a amendment saying that you are having a two option, whether you want to go for 18% with ITC or 5%, that you can decide. That is what they have clarified. The land is an immovable property, the sale of which attracts only stamp duty, no GST. I am right, sir. Definitely you are right. Land is an immovable part. The land is an immovable part, sale of which attracts only stamp duty. Correct? You are 100% right. But during the course of construction, if you take a advance, then it is a worse contract. You are eligible. You are liable to pay the GST. Okay. Who is this? Probably CMA Ritish. Okay. No problem. Now, changes in rate of tax for a sale of old motor vehicles, rate of tax. Okay, 8703 old used petrols. They have come with an amendment in the 87 chapter. All old and used vehicle other than those mentioned in the serial number 123 is 9%. Okay, rate of tax serial number 4 is increased from 12 to 18%. Earlier it was only 12%. Now it is also 18%. Okay, this is the amendment. Whatever I have mentioned in red, that is an amendment. Okay, earlier it was 12%. Now it is 18%. RCM notification. This is relating to service provided by a sponsorship, any body corporate. Supplier of service is other than body corporate, any body corporate or a partnership firm located taxable territory. And another amendment is service by a renting any immovable property other than residential dwelling, any registered person other than a person who has opted to pay tax under composition levy. Okay, for composition levy, RCM is not applicable. That is the amendment. Then waiver of late fee for delayed filing of GSTR 9C up to 31/3/2025. If you have filed any 9C, if it is delayed, absolutely no problem. They will waive the late fee. And application of rectification, enable filing of application by rectification. Okay, GST Council enabled the rectification order part by 16.4. Everybody knows very well. Okay, up to now, I think somewhere in November 30th November 2021. If you file the return late, absolutely no problem. 16.4 time limit is not applicable. Hence, you are eligible. That is what they have given an amendment. Because of that amendment, those who are affected party, they can go for application of rectification. That is possible. Okay, those who are having affected party, immediately they can go for rectification. They will rectify it. Especially for the year 17, 18, 18, 19, and 19, 20, some of the associates, they have filed the return late. Even if they have filed late, absolutely no problem. If they have filed before 30th November 2021, they are eligible to go for rectification under Section 4. If any appeal application pending before the appellate authority, please withdraw it. And if you go for rectification, they will rectify the order. And advisory for waiver scheme under Section 128A, both the forms GST SPL 01 and see the especially 128A. I think already some of the other members they have already discussed. Even then, I will give 2 to 3 minutes explanation. Then I will go next, because see, this 128 waiver scheme, they have come with some circular saying that what is the process you need to follow, how to make the application, when you have to make the payment, all these things, and what type of order is eligible, what type of order is not eligible, all these things they have explained in detail. Kindly go through the notification and circular. Kindly, whatever eligible order, kindly withdraw it and go for waiver. Okay, that is eligible. And implementation of mandatory mentioned HSN code GSTR 1, they have issued some of the guidelines relating to HSN, how you have to file where at the time of filing the GSTR 1 and 1A, how to mention the HSN. Okay, manually you should not mention it. In drop down menu you have to mention HSN. All this clarification they have given to file the HSN, whatever to put a HSN code. Okay, wherever it is mandatory. And hard locking auto populated liability in GSTR 3B. As per the notification, they are supposed to block the GSTR 3B. Whatever input is coming from 2B, they are supposed to block it. Due to hardship, the industries are once again approached the GSTN, and now they have released. Okay, hard locking auto liability in 3B. Please refer advisory dated October 7 regarding restricting the editing auto-populated liability in 3B from January 2025. However, various requests have been received from the trade seeking time for the same. Therefore, the decision for non-editable auto-populated liability in 3B is currently not being implemented from January tax period. Okay, time being they will postpone it. It may be noted that above change will be introduced soon. Okay, they will not block the any amount. Whatever changes you want to make it, you can do it. remove auto-generated, use auto-generated ITC statement, auto-generated removed, including add or flexibility. ITC statement was rigid, allow flexibility in GST return statements. Okay, with this, my PPT is over. Now I will reply the question and answer. We are having another 4-5 minutes. Kindly ask the question. I will reply it. Otherwise, I will close it. Thank you very much. Once again, each and every members are attended in a big number. Thank you very much to each and every member. Okay, Babu Velu Murugan sir, 32596 membership number. If you have a 2 restaurant in the same city, one tariff more than 7,000, another less than 7,000. How to declare? It is possible to declare the place of business wise. Kindly clarify. Sir, at the Babu Velu Murugan sir, no need to declare separately. Say for example, wherever your tariff is more than 7,500, if you are having a restaurant, there you have to charge 18% on restaurant services also. Wherever you are not having a restaurant, wherever you are not having more than 7,500, there restaurant services you can give 5% without input tax. That's possibility is there. It is supported by advanced ruling of Karnataka, Sandesh Hotel, Mysore. Okay. If you search in Google, you will get that advanced ruling authority. Kindly go through it. If you are having any doubt, okay, I will clarify. You can talk to me. My mobile number I have written here and my email ID also I will write here. Okay, 944. My mobile number is 94483571002. My email ID vbut.co@gmail.com. At any time, anybody can ask the query, no problem. Okay, if you have a 2 restaurant, I think I have clarified. Babu sir, I have clarified. Okay, then his another question is also, can I please touch upon the GST TDS deduction of sale of scrap if time permits? Sir, sale of scrap some other day we will discuss. I will clarify matters relating to this. Sale of scrap, definitely it is a big subject. I will come with another webinar. Definition of the body corporate for a sponsorship service. Body corporate means all private limited and public limited companies. RCM GST paid on rent to property owner, can it be taken ITC tenant if the when it can be taken? Definitely, sir. PB Krishnan sir, membership number 38696. Whatever RCM paid on rent, definitely you are eligible to take the input tax credit subject to your eligible business. If you are running a eligible business, definitely you are eligible to take that input tax credit. That is possible. PV Krishnan sir, whether you got it or not, if you reply, okay. Very informative session and thanks so much, sir. And he has taken lot of effort to explaining our queries. CMA Nitin Chakravarti. Okay, sir, definitely that is my duty. Whatever, especially in my webinar, I will touch upon each and every query. I will not leave it. Okay. Whatever subject relating to whatever GST, definitely I will clarify at least 90 to 95% or 98%. Maybe 1 or 2 exception that I will handle it separately. Can a school sell it used buses without GST? No, sir, school sells it without GST, not possible, sir, not possible. Okay, his membership number or name, it is not there. Okay, noted, thanks. Okay, once again, thank you very much. Each and every person, those who have attended, and In future also, I will come with some different webinar, and TDS and TCS relating to GST. This is also very, very important. Probably next webinar, along with some other small subject, I will take TDS and TCS. TDS of GST. Thank you very much once again. Over to TRD. Anybody is there from TRD? Tax Research Department? I think nobody is there. Okay, thank you very much. Another 2 minutes there. If you ask some question, I will clarify. Otherwise, please take a look on GST on real estate. There is some conflict in rates of GST before 142. Yeah, definitely, sir. In fact, I have handled twice or thrice that GST relating to real estate. Even then, lot of doubts and lot of problem will be there. That will take a lot of time. Even then, once again, I will come with that. Not a problem. See, if we are having anything, just write to TRD so that TRD will make arrangement. If you write a mail to TRD, depending upon the request or your request, they will make arrangement. Your mail address once again, please. vbut.co. vbut.co. vbut.co@gmail.com, sir. vbut.co, sir. Thank you. Okay. Liability is discharged against the order DRC 7 through DRC 3. Do you need to file a DRC 3A? Not required, sir. 3A is required. Liability is discharged against DRC 07 through DRC 3A. Sir, see, the thing is 3A is required whenever DRC 07 directly. If you are not paid through order, then definitely 3A is required, because otherwise in website that liability will be continuing. If you pay the liability through that order, automatically it will show in website zero liability. That is why better to read the 3A and better to close it. Thanks a lot for the insight presentation. Thank you very much. Thank you very much. Okay. Once again, now exactly 4:30. Thank you very much. Once again, TRD Tax Research Department.
Thank you, sir. Thank you for the wonderful session. Thank you, participant. Now, sir, we're ending the session now.
No, nothing. We will end the session. Thank you very much once again.
Okay. Thank you, sir. Thank you very much.